Good day, everyone. Welcome back to the channel. This is the Market Beast edition of the channel. Fellow compadre speaking here. Let's dive into the charts for gold, guys. Looks like we have some volatility entering the market here. We're going to go over a few things. Nothing's rehearsed on this, guys. So expect unprofessionalism, expect inaccuracies on the channel. Subscribe to the channel if you enjoy the content as we go along here. But let's not waste any time. Let's just dive right into the charts here, shall we? All right, so today's November the 9th, 2020. The current price of gold is going to be $18,089.58, fluctuating there, a little volatility, down about 3.2% for the day. Okay, wow, look at that. Looks like we're in some real downward pressure, man. I mean, the sellers have entered the market officially. Okay, so these are the daily candles. I'm going to zoom back in here. This is actually, I just want to let you guys get a macroscopic look of my chart that I've been following for months now, actually. Ever since the breakout in this symmetrical triangle, that it's kind of a weird symmetrical triangle that I've been following for some time. We got a break out of this triangle on April 2019, represented here in this white line. And this symmetrical triangle target actually measured, well, as far as I can measure, with my very, very brief knowledge here in the markets, less than 3 years, $2,394 approximately. That's the target from this breakout pattern that I don't think I've ever seen anyone put this pattern on their chart. But leave a comment down in the comment section if you have seen someone with this symmetrical triangle on, TradingView or somewhere. Let me know that in the comment section. And that's basically what I'm seeing here, guys. So what I'm looking at here on the 3-month is there is actually an official reversal candle that I didn't even pay attention to because I was just, completely convinced that this thing was going to definitely go to $2,300. But it looks like the market wants to retrace here. So the one I just circled is the July 2020, that 3 months thereof. That's a 3-month candle. It is it's technically a reversal candle because of the proximity from our infamous purple line. It tends to want to correct to that line whenever you get some sort of reversal. So I wouldn't be surprised if gold were to come down to this purple line here, which is currently at about $16,054. Guys, take it easy on me there in the comment section. I'm not saying it's going to get that low, okay? But what I'm saying is the typical behavior when I see reversal candles in such a large magnitude. Again, this is a 3-month candle. The market tends to want to back test some sort of support. So let's look at this logically here. Notice this clustered area price action here before gold actually topped out back in, 2012. Notice I'm going to put a horizontal line on the chart just to represent the previous resistance level, and this will probably make a little bit more sense as to why I say the 16,224-ish level where the purple line is currently at. So we can do something like this. I mean, you can kind of put the line in different places. You can say it's like 1634, something like that, or you can just kind of adjust it up or down a couple of dollars there. But I'm going to leave it right there at the $1,634 level. So if we were to get some sort of back test or retracement, I mean, that wouldn't be a surprise to me because that was the previous level of resistance. Okay, it's all about support, resistance, support. I know that's cliche. I'm going to say that on every single video, so get used to it, guys. It's important to understand that we've just broken above that, and these are the higher time frames, guys. It's important to just kind of throw away those daily, 1 hour, God no, 1 hours. I never look at that stuff. You're never going to get that. If you're interested in the higher time frames, the macros perspective on this channel is what we provide every single time. We don't go any lower than a 12-hour. Actually, on the traditional markets, alternative markets. The traditional markets, we only stay above the daily is the lowest we go. Okay. And I don't like basing my market entry decisions on the daily anyway. So let's continue here. If there were to be a back test, again, this is where the price represented on this April the 1st, that 3-month thereof, is when there was an official breakup up above the previous resistance level. And some may say, well, why don't you just put the line all the way at the top up here It seems as if you're trying to justify your previous resistance level. I guess we actually can put a line there on the $1,786 level for this spot gold currency here. So I guess we can say a range, something like that. And the reason that I put the line at 1634 is because the candle's bodies, okay? If you notice here on the July the 1st, 2011, you see how it got rejected? The body actually closed below that line. And the following month there of October as well, it closed below that line, okay? And there was actually a back test of that line. If you see here on October 2012, there was like a back test, and there was an actual breakthrough, but it only lasted literally just 3 months, because the very next month it just started going down, and the very next month, of course, it broke back below this green line, and from there you had that very significant impulse leg to the downside. So that's why I put more emphasis on the $1,634 level, just because of the behavior. It's just my way of looking at this stuff, guys. Again, very, very new to this, so bear with me here. Leave your comments down in the comment section. We can all learn together. Leave your TA advice. No news, guys. I'm very, very uninterested in any news. Very minimal news, I'll say that. Okay. All right, so that's what I'm saying here, guys. If there is going to be a significant retracement, or a retracement rather, in the spot gold market, there's nothing to lose your shirt over. Obviously, depending on where you bought in. I mean, if you bought in at the higher levels, I'm pretty sure you're starting to sweat a little bit. The higher levels being at near $2,000 in gold, even potentially even the 1960-ish levels. There's been some activity as far as I can see here on the spot gold price, and from the highs we're currently down about 8%. Okay, so that's depending on how your investment strategy in spot gold. Are you like a long-term holder? Are you swinging this thing day to day? Then yeah, you're pretty wrecked, I guess, if you're bought in at 2,000 day to day. Or like kind of a swing thing. So yeah, just be cautious. Have some sort of exit plan, guys, if you're wrong about your market entry decisions. So yeah, let's look here let's take a look at the weekly here. Did we just close a weekly? Okay, so that makes sense. So we just opened a new candle on the weekly here, and we're just trying to back test this infamous purple line that we pay attention to. So am I going to anticipate more downwards pressure? We're just kind of sitting on that line there. So I'll say this. Well, there's 4 more days to close on this weekly candle here. So I'd have to say that if the spot price just so happens to find some sort of support, and I guess I could just kind of box out this range here. If there is some sort of support, or if it wants to close within the range, for those of you listening in, I just put a rectangular box between 1,846 up to 1,876. I mean, that wouldn't be a bad place to find support. Although the candle would be set up to be some sort of a bearish engulfing candle, if I can just kind of use my hindsight vision here, if it were to actually close, I guess, within this green area, that would be a, somewhat of a bearish engulfing candle in comparison to the previous buying interest candle here in the market. Okay. But honestly, bearish engulfing candles are not always a 100% indication of a market reversal, believe it or not. You just have to keep your eyes on the charts, guys. The markets behave in certain ways, and they have certain boundaries. You just have to have some sort of a keen understanding of how that stuff works, and that way you can better have market entries and exits at practical levels. Okay, let's end things out here. Let's pull up the month. Let's pull up the 3-month, and let's pull up the monthly here. Okay, so what I'm seeing here on the monthly is, just put a line here. Remember, guys, it's just my way of understanding this stuff. Okay, so that's clear. So that makes sense. So honestly, it does make sense why the market is correcting here. And it doesn't make me sound like a genius, because obviously it's doing it right in front of me. So I'm not trying to sound like I'm saying something spectacular here, guys. But what I will say is, if the market does correct, and again, I mean, at some point, it's going to go back to the upside. We could, in fact, we could even find, well, gold here, spot gold, could find support here on this infamous purple line, which is currently at about 18,700 and, not 18,000, 1,873 dollars. Okay, that's where it currently is. So if it finds support there and it continues to trend higher, that wouldn't be surprising to me. Okay, but it's definitely due for, it's been due for a correction for quite some time here. So I'm going to say this in closing, guys. Let's do this. Let's erase some of these lines here. We got a bunch of lines. I'm going to say that if the spot gold is actually experiencing an official retracement in the markets here, I'm going to speculatively say that gold may experience a little bit more downwards pressure, even as low as about 5% more in the markets. I'm not sure if that's going to actually happen today, next week, a month from now. I'm not sure, guys. I'm not good at determining how long the market takes to do certain things, although sometimes I am. But in this case, I'm just going to say that gold has the potential to back test the previous support level that we've already identified here as potentially 1,782. And if it gets a little bit more extreme, we're just going to have to put that line back on the chart. That sits at about 1,600 and about 34ish, I think we said, represented there on that green line we just put on the chart. But let's not get too bearish here on gold. Let's just leave this thing out, saying that gold has the potential to bounce around and consolidate sideways in between these two levels. And we're going to keep this on the chart, so that way when we revisit, we'll just know everything is still as it should be in the spot gold price. And these two lines, for those of you listening in, is going to be at about 1,783.51 cents and a high of about 1,967 cents. I'm sorry, $1,967.72. So that's what I'm seeing here from just a very extremely brief look at things in gold. I'll be honest, I haven't been following it like day to day, but just logically, the way I understand this stuff, I could just kind of see gold potentially finding support and resistance within this range, again at about 1,783 and 1,967, that approximate range. Okay, so nothing to lose your shirt over. Just be sure to stay in tune in the markets and be on the right side of the market so that you can always be profitable and increase your portfolio month after month. That's it, guys. Be sure to leave an appropriate comment just below. Leave a thumbs down below, or sorry, leave an appropriate thumb down below as well. Leave a comment. It's Napoleon Macro, guys. I'm going to go ahead and sign off. Leave down in the comment section. What do you think is going to happen next on the spot gold price? Because it looks really, really volatile right now. And yeah, just let me know. Get a discussion going down in the comment section. Let me know what you think is going to happen. And that's it, guys. I'll be sure to catch you guys in the next video. Take care of yourselves and have a good day. Bye for now.